Let's get started. Thanks for being here today. My name is Bart Frischnecht, and I'm head of sales operations at Lumen Energy. And welcome, and to this important topic. You may have already listened to a number of webinars about this same topic. We will give you something new to think about today. So today we're going to cut through the complexity around solar tax credits and give you a clear, actionable roadmap. And the window to actually capture these sunsetting federal tax incentives is shorter than most people realize. And so we want to give you the best tools you can have as you make decisions over the next weeks and months. A quick intro on Lumen. We specialize in helping sophisticated CRE owners like many of you navigate your solar investments at portfolio scale, whether you are leasing your roof to a solar developer or developing the projects on your own. We bring our experience and expertise in the market to help you get the best deals possible and have the best projects possible. Why is it important to be talking about this topic right now? Well, one of the most attractive ways for CRE owners to take advantage of the economic opportunity that is solar energy is to attract solar developers as rooftop tenants. And the solar developer bears the full cost of capital for the cost of the project, and you receive a lease payment. And so that's great. The solar developers have become experts at taking advantage of all of the federal and the local incentive programs so that they can offer you the highest lease rate possible, and you don't have to become an expert in all things solar. And the challenge is that the One Big Beautiful Bill Act, which is now a law, changed the expectations that the developers had around those incentives. So what was supposed to be a stable policy for the next several years through 2032 is now on an accelerated sunset. So if you've been in the waiting to see on solar, the wait is over. You can still grab a piece of the current economics, but you really need to be acting now if you are able to move quickly to take advantage of current incentives before we see the sunset of the federal incentives that have been a key part of many solar developers' plans as they have rented commercial rooftops across the country. So let's talk about that today a little bit more. In terms of the outline for the next 40 minutes, we'll focus on what matters most. So what's changed, what's available, and then what you need to actually do to take advantage of these. And so we'll leave time at the end for discussion. Please feel free to add your questions as we go using the Q&A feature rather than the chat. I think that the Q&A feature should be on. The chat is likely not going to work for all of you that are attending the webinar. So please keep your questions coming, put them right in the Q&A section. So let's start first with what's actually changed and why this matters. Before we dive into the nitty gritty, it's important to just look at the overall timeline and do some compare and contrast. So whether you're deep into your solar energy strategy and you've done this a lot, or whether this is the first round that you're really considering, should I lease my roof or should I look into solar? The reality is that we have all collectively been operating under a current expectation for some time. And the way that CRE owners can take advantage of solar has actually changed dramatically. And so from 2022 to 2024, we were living in the world of the Inflation Reduction Act. So solar developers were able to offer incentive boosted lease payments based on those federal tax incentives. And so CRE owners could work through their portfolios at a measured pace, expecting those incentives to be here all the way through 2032. But now those assumptions have changed. And so now there are very specific timelines and deadlines to be able to take advantage of those federal tax incentives before they are gone. So clicking one level deeper on that, the primary benefit of the Inflation Reduction Act, as far as taking advantage, commercial real estate owners taking advantage of getting attractive solar leases or putting solar on their own roofs, was that it renewed already existing federal tax incentives for solar investment for a full 10 years. So this felt like it was going to provide a level of certainty that hadn't been previously available in the solar industry because those federal tax incentives had to keep getting renewed every few years. So there was this decade plus stable, predictable incentives, long planning horizon. Many owners, you could all collectively say, we're going to do this at pace and just take our time to go through our portfolios and take advantage of this, but not feel like we had to jump into anything. That normal planning cycle, roof replacements, normal capital planning, that was possible under that regime. However, now that we have the One Big Beautiful Bill that has become law, everything changed. So the OBBB explicitly discontinued those federal tax incentives for solar and wind projects. And now there are very specific rules for which projects will qualify for this incentive as it fully sunsets over the next few months and years. So that acceleration means that there are real deadlines now this year and also next year. And the rules for qualifying for those tax credits have also gotten a lot more stringent. And we'll talk in a little bit more detail about that here later on. So what does this mean as a CRE owner? Well, the new strategic implication is that the owners of commercial real estate need to prioritize their portfolios immediately to identify what can be done today to take advantage of the incentives before they sunset, and then what can be saved for later. The good news is that there's still substantial value available. What you can do today to take advantage of the incentives, and then what we see coming forward in the future for solar. So I want to break down what is really on the table. And I'm going to do that using this concept of 3 different waves of solar. And so this is a way that you can think strategically about your entire portfolio over the next few years. And this hopefully will help you avoid a couple of mistakes. So one would be a developer shows up and says, you need to do this right now because this is the only time you're ever going to be able to do solar on your property. And then you end up chasing a bad property and doing a project just because you feel this urgency for ITC. But it turns out that probably wasn't actually the best use of your time or effort to get that project done. It just wasn't a great project to begin with. And then the second idea is that once these sunsets happen, then you pack up your bags and go home and say, guess there's nothing else to do here. The federal incentives are gone, so now solar doesn't make sense. So neither of those are true by themselves, and so there takes some nuance. So let's talk about these different waves. So wave 1, this is where you've likely been focused already, and what we've emphasized so far in this webinar, it's how to do the ITC sprint. So your developer partners have until July 4th to be in construction to capture the 30% credit. And so this is for properties where you have clear site control and you can move fast. Maybe you think about your very best properties where everything lines up. You have a clean title, you have a good roof, you're in a state with strong local incentives. This is where speed matters the most. And so if you're not engaging a modern solar broker like Lumen or a developer directly right now in Q1, then you're at serious risk of missing that window. We'll talk more about how to really take advantage of that wave 1 here in just a little bit. Before we switch and just dive into the details of wave 1, I want to highlight wave 2 and wave 3. So every property that's a good candidate for solar is not going to make it through your system by the ITC deadline. As hard as you try, some of those projects are going to slip through the cracks. And so wave 2 is where there is still a strong opportunity to focus on the pure fundamentals of your property and the solar market. So thinking about your biggest buildings or where you have very high energy loads or in premium electricity markets, even without the ITC, these projects are going to pencil based on the lease rates that developers can offer or the energy savings that you can accrue just by themselves. And so there are markets with strong local incentives and high electricity prices that will have strong enough economics that solar works without the federal subsidies. So you shouldn't abandon those types of projects even as we move through the year if you're not able to fully take advantage of the ITC before the deadline. And then we look even farther forward, and this is where it gets really interesting as you think about your portfolio, is that wave 3 is really the future opportunity that is not even on people's radar yet. And so there are some really big macro factors that mean ITC sprint, great, let's take advantage of it. Big buildings, let's take advantage of that. But as we move through that and you get more experience with solar and rooftop tenants and all that goes with that, solar equipment costs continue to drop. The all-in project costs we expect from developers will start to come down as the market normalizes post-subsidy. Electricity rates are climbing at 3 to 5% annually, and in some places, much faster rates than that. Battery storage has its own ITC, has its own investment tax credit that is going to run through 2033, 2032. So there's more to be done in these renewable energy projects that are still going to actually be able to take advantage of some of these federal tax incentives. So we expect developers to be able to find ways to take advantage of these local battery programs that will be able to offer a lease rate for siting a big battery. Those will become better and better, and they will look a little bit like community solar looks like today. And we also think developers are going to get better and better at offering batteries as standalone or paired with solar project that can reduce your electricity bills through demand charge reductions or other battery mechanics. And then there are new state programs emerging, including community solar and building performance standards in new markets. So all of those trends will mean that what feels like a shrinking pie today in terms of those overall lease values and incentives, we expect to rebound and strengthen just as these macro trends continue. So again, a long time in this slide, but to sum up, execute on wave one aggressively, but be selective so you actually get project executed. Be deliberate about the best buildings you have and take advantage of the strong fundamentals in wave two, and then keep going back to your portfolio and prioritizing those properties as the macro trends change in wave three. Okay, so we talked about three different waves, but let's focus on wave one, the ITC sprint. Here's a particular advantage which highlights why this matters now if you can take advantage. So this representative example is similar to many things that we see every day going through our marketplace and also the feedback we've received from our developer partners. And so let's assume there's a representative 200,000 square foot industrial building in Maryland. You are thinking about leasing the roof to a solar developer, and that solar developer says, great, we can offer you $90,000 a year in year one to lease your roof and put a system on it, and then we'll be participating in the Maryland Community Solar Program. It will be great. We'll offer you a 2% escalator every year. It'll be a 20-year term. If you want to transfer the ownership of the building, the solar lease goes with it. It's great value to the property. Fast forward, if that project doesn't qualify for the investment tax credit, then we expect that same developer to come back and say, if you were to go to them a year from now and say, well, now it's a $45K per year lease rate instead of a $90K per year lease rate. And the difference in these lease rates is that additional upfront capital that the developer needs to fund or finance to make up for the previous dollars they receive from tax equity investors. And so again, macro trends will continue and the lease rates will rebound and come back up. But the difference between making the deadline here in this first half of the year and missing it in the second half of the year could be as much as half the lease value in a particular project situation like this. So how do you know where to focus? So if you've got projects that are ongoing, you should do everything you can to get those projects done. For projects that you're looking at right now that have just popped up on your radar or that you've been thinking about and you want to see if you can actually make them happen, not all properties are equal when it comes to really being able to execute on the investment tax credit opportunity before the deadline. So what we're seeing is the best formula for getting to rooftop tenant leases with solar developers ahead of the deadline is to look for the following characteristics. So industrial, retail, office, multifamily, so a range of commercial buildings, but with large flat roofs in key solar markets. And then there's the X factor. And the X factor is that you either have an existing solar lease form that's already being approved inside your organization, or you have the ability to get your internal and external counsel resources lined up so they can support a very short lease negotiation period. So thinking about from picking a partner to getting that lease signed on like a 6-week time frame is really what you need to be thinking about to make this happen. And the reason for that is because depending on the project size and the project opportunity, the way that that solar developer will take advantage of the investment tax credit is that they will either beat the construction start deadline, which we'll talk about a little bit more in the future, but that's getting the project actually started by July 4th of this year, or be on track to actually have the project in operation by the end of 2027. And so projects that can meet one of those two timeline requirements, the vast majority are going to fall into this bucket if you're starting those projects right now. All right, so now for the practical part. How do you actually capture some of this value? And so we can walk through a couple of decision frameworks that we're using to help people prioritize their portfolios. So I would think about the first half of this year in terms of this type of a plan. And so, like I mentioned before, the very most important thing you can do is sign agreements for projects that are already in flight. So take February, early March to sign agreements, get them completely clear off your plate for any projects you already have in flight. This is your best bet and will give the developers you're working with the very best chance for lining everything up so that they can sign leases, fulfill their obligations with leases, and offer you the lease rates that are at this higher attractive level due to the federal incentives. For new projects, take February and assess and prioritize your portfolio into 3 waves. So get your list and say, okay, what can be in the ITC sprint? What is the strong fundamentals, fast follow in the second half of the year? And then what is going to be left to the next era of solar development? In March, you need to then be selecting providers. So typically this is a commercial solar developer with a demonstrated track record. And then you need to get the leases signed ASAP in April or May so that the developer can actually complete the diligence and the project work that's going to be required to qualify for that investment tax credit. So this sounds easy, right? So let's go one level deeper into some of the nitty-gritty that's going to be required to actually execute on this plan. So excuse me, CRE owners have unique portfolios and unique strategies for taking advantage of solar. And so it was as unique as you are in the commercial real estate world, we find that solar strategies end up laddering up to one of these 3 approaches. So either a site lease where you're simply just taking a payment for leasing your roof, power purchase agreement where you're buying the electricity that a third-party developer has built on your roof, or taking direct ownership. For the purposes of capturing ITC incentives, we strongly recommend focusing on the site lease path in attractive community solar markets. That will be the easiest and fastest path for you as a CRE owner, where the developer who is the expert in navigating this process can take most advantage of their experience and their current network and capabilities to execute on the timeline as required. So with that lens in mind, thinking about, okay, site leases for community solar markets, then here's a practical workflow. So you won't be able to boil the ocean. We're talking about really fast timelines here. So you need to be able to triage your portfolio, pick the obvious winners, and then model them properly and move on. And so you can think about that in terms of these 3 main stages, right? You need to do a quick property screen based on some of the things we already talked about: address, the roof, the ownership structure. Then you need to go out and get competitive bids so that you actually have an offer that you can transact on. And then you need to actually get to an agreement with your selected provider so that they can then take the next step and move the project forward and execute on it so they can deliver that lease payment once the system's operational. To get to that lease, there are a number of additional steps. So you have the property, you have the developer. In parallel, the developer will be completing additional diligence activities to set them up for project success while you are negotiating the site lease. You get to a site lease agreement and you execute that. That will then free up the developer to have confidence to execute their own strategy. So they'll have a begin construction or a safe harbor strategy, or they will have a timeline where they're confident that the project can be completed by the end of 2027. So those are really the three ways that a developer will qualify for the investment tax credit. And we'll again go one level deeper to talk about what that means practically for you as a commercial real estate owner. But once if you get to that point now where the developer can execute on their begin construction or safe harbor strategy, or they have a timeline in place where they feel like they can get the project completely operational by the end of 2027, before July 4th of this year, then you can breathe a sigh of relief and then you're in project execution mode. So the developer will continue diligence activities. You as the CRE owner will approve the final design. The developer and all the partners will complete the solar installation. The utility will give approval to begin operation, and then the developer will begin making lease payments. And so there's a bunch of activities that will happen. They don't all have to happen before July 4th of this year. Most of them will happen after, but the critical activities that need to happen before are to find a provider, sign a lease agreement, and do that in advance so that the developer can execute their strategy for achieving the federal tax incentives. Okay, so we're getting increasingly technical as we go through here, but now let's talk about what it really means for the developer to be able to achieve the qualification they need for these federal tax incentives. So we're revisiting this timeline idea, and so again, just to emphasize, before July 4th of this year, a solar developer needs to be able to demonstrate that they've begun construction so that they can qualify for that 30% ITC window. If they do that, then they will have a 4-year completion window. Now, most of those projects will get completed much quicker than 4 years, but it gives a buffer so that they have time to go through all of the other approval processes and program incentive applications so that they'll be able to get the project up and going and offer the lease rate that they quoted you. If they're not able to demonstrate beginning construction by July 4th, there still is the opportunity to qualify for the investment tax credit. And that's by having the project operating by the end of 2027. So some smaller projects, some states that have faster timelines, this is a real possibility. And so again, this is a way that you can still qualify for the tax credits, even if you aren't able to demonstrate beginning construction by July 4th. After the end of 2027, unless you have a project that has been safe harbored or has begun construction in the very specific ways that they need to qualify for, then the ITC is not available for solar projects that are put into operation. So that represents the end of the ITC, which has been an ongoing program for more than a couple of decades now. So when we talk about beginning construction, what does that really mean? So people can get tripped up here. CRE owners may actually feel like they have all the way until July 4th to negotiate and sign a lease. And in previous versions of how projects were thought about to be safe harbored, there was a lot more flexibility in what a developer could do even up to the last minute and still qualify for an expiring tax credit deadline. But in the current world we live in, the developers need a lot of confidence that the project is actually moving forward so that they can put the resources in place that they need to qualify for the tax credits. And so in today's world with the OBBB, begin construction means actual work. It doesn't just mean drawings. It doesn't just mean clearing the site. There are very specific guidelines now around this. And so I want to talk through really quickly that begin construction and then talk about the alternatives to that challenging proof point of beginning construction. So for a developer to demonstrate that they have started construction, they need to actually be on site installing components. But we're talking about projects we're starting right now. So that's unlikely to happen, that they're going to be on your roof installing components in the next few months. If it's a ground mount site, they might be able to do some foundation work, but that's also unlikely. And so the very bottom of this list, what counts manufacturing custom equipment? The most common way that developers are pursuing this begin construction is to order a custom transformer and have that in process or delivered so that they can show that they've spent significant capital on a part of the construction project that actually needs to happen. So they will qualify for beginning construction in that way. There's a whole bunch of activities that they will be doing, but those will not be sufficient to qualify for that begin construction qualification rule. Now, there are some exceptions, and so there are other ways to qualify for the tax credit besides having your custom transformer delivered, or actually doing the work on the site to demonstrate commenced construction. And so there are there for projects that are smaller, so under 1.5 megawatts AC. So this is thinking about projects that would be on a 200 250,000 square foot roof or smaller, those types of buildings. Then it is still possible to qualify for the investment tax credits through a safe harbor mechanism. And so this really means just spending a certain amount of the total project cost by the deadline, so that you can then demonstrate we actually have started this project and we've committed resources to it. So that only applies to these smaller projects, not the bigger projects. The bigger projects need to qualify through the begin construction test. The one additional exception around safe harbor that can apply is that there are some developers who made very, very big capital purchases of equipment before September of last year. So in September of last year, there was an earlier deadline around buying equipment for those larger projects that could still qualify for the safe harbor. And so there are really three ways that people are meeting this July 4th deadline. So one is they're starting physical work. Two is it's a small enough project that they can order the equipment now and have that count towards safe harboring. Or three, they are partnering with a developer that has modules that were purchased last year that can be assigned to this specific project. And that's a diminishing pool, but there are folks out there that still have some capacity that they can assign to new projects. Okay, so again, emphasizing the timeline in a variety of ways to hopefully help clarify, or if not clarify, confuse you enough that you have questions that we can talk about during the discussion time here. But again, December 31st, 2027 is the official end of the ITC. In other words, if your project is not operating by then, it will not qualify for the investment tax credit. We just talked about a few exceptions to that, where if we can start construction now, we don't necessarily have to finish by that exact date. We have a little bit more time. And so if you're thinking about that date, okay, I need to finish by then, or at least I need to start now, what needs to happen to actually make that happen? And so for bigger projects, it feels like to us the absolute latest date that you could sign a lease with a developer and they would have a chance of having all of the stars align is for these bigger projects. So for roofs that are bigger than 250,000 square feet, is around April 1st. We have some developers that are actually telling us it's earlier than that. But thinking about the beginning of April, for those bigger projects, you really need to have a developer and a lease in place so that the developer has the time to complete all the additional diligence and deploy their commenced construction strategy. Then they qualify. If you've got a smaller project, you need to be doing similar things, but instead of needing to have that strict commenced construction, they may be able to then deploy a safe harbor strategy. In other words, buying equipment. It doesn't have that same stringent requirement. And so there could be a little bit more time for those projects to also qualify for that extension on the investment tax credit by getting started this year. Now, what if you miss the deadline? So if you have smaller roofs under 250,000 square feet, let's say, there's still a chance that they could actually begin operating in 2027 and qualify for the ITC, even if there's not a lease signed in the first half of this year. And so especially certain markets like DC and Maryland, where we feel like the utilities move relatively quickly and there's a lot of motivation to get those projects through, a smaller project in the right market, if developers, owners are signing leases in the summer of 2026, then there's still a chance that some of those projects could get finished by the end of 2027. So that's your kind of last opportunity to take advantage of the investment tax credits in this current environment. All right, so we've been racing through a lot of deadlines and a lot of content and a lot of recommendations in terms of how to take advantage of this. We have been very excited to help a number of commercial real estate owners navigate this path. And so would love to just highlight a little bit what Lumen is doing and how this can make this maze a little bit simpler to walk through. So here's what we offer. So we offer free portfolio screens, investment grade economic opportunity estimates for your entire portfolio. We can help you then make that categorization into the wave one, ITC sprint, wave two, strong fundamentals, wave three, next era. Uh, at that point, we also can then provide competitive bidding in an environment where we really represent you as the owner so that we can service and vet proposals from multiple solar developers, help you with price discovery, and help you to get more, improved deal terms for what you're actually putting on your roof and what you're agreeing to from a lease perspective. And we do that while sitting on your side of the table and providing service to help step you through every one of these steps. And so our offer from this webinar is that we'll provide this complimentary portfolio screen and take that ITC action plan that we outlined and make it real in terms of what your actual buildings are, what your actual projects are, and how to get those in flight and how to get those landed so that you can take advantage of the ITC credits and then solar beyond that. And so uh, beyond this initial portfolio screen and helping you say, what can I do today to take advantage of the ITC? We are here for your wave two and wave three projects. And so as we help our clients understand their portfolio opportunities, we're able to help them be confident that they're moving forward in the right order with the projects that are available. And take a deep breath there. We have done we've shown a couple of examples. We've talked about the timeline. I want to make sure we have plenty of time for Q&A. Before we get to Q&A, I want to give some important disclaimers. And so we have a lot of experience, and we're happy to share the experience we've gained talking to commercial real estate owners, talking to many developers, and working with them to help them get together to make deals. But please do not take any of what I've shared today as tax or legal advice. We are constantly surprised by new regulatory changes. And so what I've represented today is our best understanding of the rules today, but rules can change. Rules can be different in the future. And then your individual portfolio is unique. And so what you actually experience in terms of what your opportunities are, where your projects are, the kinds of returns you can get, those things will vary. So if you are moving forward with solar and you're planning to lease your roof, there's no time like the present to get going on prioritizing the few projects that you might be able to get done before the ITZ deadline. And if you are well down the path of owning your own solar, then please continue to keep your experts close to you, your tax advisors and your attorneys and everyone else who can help you make these decisions. And hopefully Lumen can be a partner with you there. But there are other stakeholders that make this whole machine work and help deliver the opportunities that you're looking for. All right, what we're going to do now is turn this over for questions and discussions. I've got a few questions that I can prime the pump with if everyone's hesitant here on the call. But let me see if I can find maybe I need some assistance from Katya or others on the Lumen team that are helping. But yeah, you can raise your hand or you can share a question, but would love to have some discussion now with what you've been thinking about. All right, keep your thoughts going. We've got plenty of time that we can chat through the questions you have. These are a few of the questions that we frequently hear, and so this may prime the pump in terms of some of the things that you're thinking about. So we frequently talk to individuals that represent REITs, and whenever we talk about tax incentives, a lot of times there's a concern to say, well, the way that I'm structured, this doesn't seem like this is going to be good income for me, or what do I need to know about how the tax incentives actually work, and does this work with my business? And as we highlighted, one of the main ways that commercial real estate owners can take advantage of the tax incentives is by working with third-party developers who take the risk and also the capital. And so a REIT can take advantage of leasing the roof of a commercial property that they own in the same way as anyone else, and it is good income. It looks like NOI, just like any other tenant, and the developer is the one who's fully responsible for monetizing the tax credits and managing their capital stack and taking the risk of the capital expense and everything that goes along with that. And so that shouldn't be a challenge, independent of how you're structured in the commercial real estate business. Another question we hear frequently is, what if I'm planning to sell my property? Is it worth going through all of this trouble to hurry up and race forward and do projects if I'm going to sell my building in 3 to 5 years? And we would say yes, definitely worth it. The lease itself is set up to be seamlessly transferred to the new building owner. And so there's nothing that is holding you back from being able to do this transaction and feel like it's going to help the value of your property going forward. And that's independent of whether the new buyer wants to look at this from an NPV perspective and say, okay, well, I'm just going to compress the future cash flows and I'm going to look at that, or whether they will cap it and actually, give you credit for net new NOI, just like they would for an in-building tenant. The other piece of this is that you don't need a complicated legal structure. And something that the solar leases contemplate all the time is, well, what if I have a buyer who comes out of the woodwork who uh, wants to redevelop the property, right? And so I'm not going to have solar on it. And that happens sometimes where you have one type of asset and someone else comes along, the market's changed, they want to redevelop the property. Well, all of these leases will include a termination schedule as well, so you'll understand what the cost of getting out of that is, and that can be baked into a transaction if you are contemplating a case where the most attractive use for the property in the future might be to redevelop it, so that the solar would need to move off the roof. Um, you may be a tenant, you may be a landlord and a tenant, but in the buildings where you're a tenant, how can this benefit you? There are a number of ways that we see tenants benefiting from this. So, in addition to any corporate initiatives they have around energy efficiency or around uh, other types of goals that are directly related to the solar, the tenants in some markets can actually direct, even if it's just a lease where the third-party developer is selling the electricity back to the grid. So in a community solar market where the solar developer fills up your roof, pays you a lease payment, sells electricity to the grid and to subscribers that are subscribing to that electricity, the tenant can still benefit because many times the tenant can become a subscriber to electricity. So it's possible for tenants to get a discount on their electricity based on the the project that's actually on the roof. And so that's one way. There are other ways that tenants and landlords can work together. If a tenant has roof rights, then the tenant may be in a position to negotiate a share of that lease payment, at least for the time during their time that they are a tenant in the building. And so there are other ways that a tenant can benefit from these projects, similar to the landlord. And this next question, if you recognized, hey, I don't want to take on the complexity of actually owning these solar assets and becoming a developer of these assets on my own buildings, I just want to run my commercial real estate business. How can I quickly engage a developer that does? I would point back to Lumen here as one way. There are other brokers or other marketplaces. We we are excited every day to introduce building owners to vetted developers and to help them see the advantages of different developers in different markets through a competitive bidding process. And so that can happen very quickly. We can qualify a property in the matter of a few days and then collect competitive bids in the matter of 1 or 2 weeks. And then we can help a building owner get to an award decision shortly after that. So it really can be a fast turnaround process to learn about the market and also connect with a developer at the same time. All right. What other questions do you have?
Bart, there seems to be a question in the chat.
Great. Let me check it out. All right. So I have a question here. Do you have any suggestion on how to monetize the tax credits if you own the solar arrays and can't use the tax credits yourself? Okay. This is a great question. And the short answer is that the Inflation Reduction Act made a number of provisions for uh, allowing individuals to transfer the tax credits to others. And so there is a marketplace for transferring these tax credits. You don't get a one-to-one trade. You do sell those tax credits at a discount. There are marketplaces. Crux is an example of a company that is a marketplace for actually trading those tax credits. And so whether you go through a marketplace like Crux or whether you find a tax equity broker that can work with you directly to pair someone who has tax liability and yourself, there are ways that you can transfer those tax credits so someone else who does have that tax liability can take advantage of that. Um, if that didn't answer your question, then please chime in or refine, and I can try to do a better job on that question specifically. What other questions do we have? All right. Well, thank you everyone for attending today. We really appreciate your time. Please reach out to me by email. You can also go directly to our website and you can schedule a free portfolio screen there. If that's easier for you than just reaching out to me directly, we'd love to chat with you about your portfolio or just about other questions you have about what we're seeing in the market, what others are doing. Would just love to have a conversation if that would be of value to you. So take care. Good luck on this ITC sprint. And I really wish you all the best in chasing these current projects you have going and the new projects you can get over the line, as well as continuing this solar journey with us as we move into the next stage after the ITC. Thanks, everybody. Have a great day.